Ready to get the inside scoop on equity funding? Tune into TDJ Equity Funding Insiders Podcast for an in-depth look at what it takes to access financial capital and maximize your investments. Hear from experienced professionals, including bankers, underwriters, loan officers, and industry experts as they share their unfiltered stories and valuable lessons on securing funds.
Hello, everyone, and welcome to today's TDJ Equity Funding Insiders Podcast. Today, we have a special guest that has come in. It's on the lending side. They are direct lenders. And today, we're going to talk about the MCAs, which is mostly merchants cash advance. So our guest today is going to help us to understand how that works. We know in the loan business and the loan brokerage business, there are all different types of loans that you actually can do for your business. But a lot of times as business owners, entrepreneurs, we don't know what will work best for us. So what we try to do on this program is to actually show you all the options that you have out there. It is so much options you have out there. Whether you have good credit, bad credit, low revenue, high revenue, there is different things you can do to fund your business. MCAs, Merchant Cash Advance, is one. So who we have today is an account manager. We have Jack Laudani. We have Jack Laudani. He's from Long Island, New York, and he has been in the field for a while. So he's coming to us today to give us his insight and enlightenment of what we need to do and how do we go about getting an MCA. So let's welcome Jack to our show. Welcome to our show, Jack.
Thank you, Jackie, for having me, and I'm really excited to be here.
Okay, great. So if you would, let's start off. One, I do want you to tell us a little bit about yourself and then definitely explain to us what the MCA is as well.
My name is Jack Laudani. I am born and raised in Long Island, New York, in Suffolk County, and I have around 6 years of lending experience. And recently I did move to Austin, Texas, working in the MCA and line of credit field. In regards to your question about MCAs, MCAs are an alternative type of business financing. It's not a traditional SBA type of loan, which is from a traditional bank. With an MCA, a company gives you an upfront sum of cash that you can repay using a percentage of your future debit or credit card sales. And again, a big benefit of this is the speed of funds and how fast you get it. Some of these MCA companies can fund in a day or even 2 days, especially if you need to make payroll. And this is also beneficial for companies that are around a year or two at time in business as well.
Okay, that would work for. Okay, so basically what we're saying with the MCAs, you're giving us an idea of what it's about, how you can use it and how it kind of works a little bit. And I know throughout the show, we're going to go into more detail with that. Yeah. So with your experience with the MCA, let's ask this, because we've had our clients, to call in and they've asked some questions as well. What type of companies need to go after MCAs for as a lender?
Yeah, it's a great question. Companies that typically come to the table, whether it's us or another company, pretty much are in need of the capital very fast. They have to make payroll at the end of the month. They want to expand their business and invest in materials, or just buy real estate with it. They can honestly use it for whatever they like, as long as they're able to pay it back efficiently. So it's kind of for whoever needs it. And I'll talk about more of this in the interview as well. But I appreciate having a plan when you do this and make sure that you know exactly what you're going to do with the funds and be comfortable paying it back.
Exactly. Because the reason, like you're saying, and we know as loan brokers, and we tell people as well to come in and apply for MCA, you have to understand you're going to probably have to pay it back daily, minimal pulled out of your account, or you may be able to do it weekly. Either way, you need to have a really good cash flow. That's why I think MCAs are really good if your credit score is not where it needs to be, but you have a lot of revenue or cash flow coming through your business. That's where you guys will look at the business income mainly, and not focus as much on the credit scores, like I said, but I know we got some that take it low as 500, 550, whatever. But the thing is, you're more into, let's see how much you're making on a monthly basis, how much you don't have so many insufficients, because you're allowed to have one or two and sometimes more, depending where we're going to send them, depending on what you guys are asking for. And so we'll find out that with the people to have an understanding that the MCA, the big part about an MCA is being able to repay it back. Because if they give you 50,000, can you deal with them pulling that everyday amount out of your account? And let's say this, Jackie, what is the time length compared to an MCA compared to a term loan? What's the difference in the enforced terms with the MCAs?
Yeah, MCA versus term loan is a big difference. I would say, like, in regards to like timing of funding, you're saying?
Yeah, well, term loans, they give them like 3-5 years to pay back. 6 years. But usually MCAs,
Exactly.
they are done a little different than that, right? How are they done?
Yes, great question. So MCAs are obviously more high risk. They are typically paid back anywhere from 4 to 6 to 12 months, in that range, maybe a little more. I think I typically refer to it as like it's a company that is in its growth phase and they can't qualify for a term loan.
Right, it'd be good for that.
For term loans, you need more experience, more time, and then term loans are, like Jackie said, 3 to 5 years payback with a lower rate. So, everyone's goal in this industry hopefully is to, go get to the term loan phase and use Jackie and others to grow their business.
Right, to get that. So let's say this. I know you mentioned something about high risk. Now, when you say high risk, and I want my listeners to understand, we're saying that it's a company, MCA takes on high risk lending that normally banks and other ones won't do. So we're not saying it's a high risk, a chance you shouldn't take it, or it's not something bad. We're not saying that at all. We're just saying it's meant for those people that typically the banks do not want to deal with. Like you said, if you're a new business and you only been in business for 6 months compared to 2 years, they rather you be in business for 2 years before they start giving you money. So you can come to us to do an MCA, and you can be in business for 6 months and got 6 months or 3 months of bank statements, and we can look at that and see how much you would probably pretty much qualify for, right? That's the information qualify for. That's basically what you guys would be looking for, right? So
yeah, we look at
if that. So let me ask you this.
Cash flow and stuff.
Okay, so let me ask you this. That's what I was going to ask. What are you looking for when you see those bank statements? What are we looking for?
Yeah, so there's a few things, and it really depends on which lender you are as well. But credit score is a big one. Take a look at credit score. We look at the revenues, so how much revenue, or deposits that enter your business account. What are those numbers looking like? Depending on the amount, typically that's the amount that a lender could potentially give you. So if you bring in 50K a month, a lender may take a chance and give you 50 or more, depending on that, if they see that on a consistent basis. And lastly, affordability, I think, is a big one too. So if your account has negative days where you didn't make the payment or payroll was taken out early, that's typically a red flag for certain companies. So we look at just making sure you're maintaining a strong daily balance, usually above $1,000 every day. Again, depending on the company, everyone's different, but that's the three things I would say that we look for. And then industry and, how you're getting it. Typically, sometimes we'll look at that as well.
And also what I want to say too, when you look at if you're according to your business, that I have seen that work well with MCA, and I know it's a lot of different industries that you could use, but you need to be a business, like you said, $1,000 a day is what we look for, or some type of consistency in the cash flow. So when we say cash flow, we're talking about those that get money daily. So someone like that would be like a gas station, a bakery, anything that's retail pretty much. Those are daily, that you get a money daily on a daily thing, compared to if you're an interior decorator. It may be 2-3 weeks before you get yours, or if you into, a construction company, it may be 2-3 weeks, but we still can work with you based on the amount mass or the volume of money you have coming in. So that's something I think in MCAs we need to let people know what industry works better. So with your experience, when it comes to a borrower who wants to consider the MCA for as an option, what is the most important factor you think the borrower needs to consider when they're looking at an MCA funding as an option, and why?
Yeah, no, I think they have to. I really stress this, like, have a plan, make sure they're aware of, these funds are entering your account, but like Jackie said, certain companies will charge you daily to pay back or weekly, depending on who you go to and what you qualify for. So I think, before you even get the cash injection into your business, think about, what am I going to do every day with this? How am I going to invest this? What do I need to use this for?
Right.
Because hopefully you come out on top of this and either get more funding or eventually go to an SBA place, as Jackie has as well. So I think there's you want to have a plan, you want to execute it. You don't want to just take the money and buy a car with it. I think that should be used with your own cash flow. But that's kind of what I recommend: just have a plan and take action, execute.
Right, because these MCAs are something that again we explain, because one thing about our agency, our company, when you come to us, we're looking at what's best for you. Where it may be a term loan or an SBA loan, as you mentioned, or be an MCA. That's a good thing by coming to the broker. We can look and see what works for you. So with that experience, we're going to say when it comes to dealing with the MCAs and we look at the use of funds, I tell people an MCA loan is not what you take and go buy a car, like you just said. Or if you're going to buy something that you are flipping, meaning that I'm going to use this money to hire this salesperson that's going to bring in this much money, that I need to use this money for that. If you're going to use it for equipment that's going to make the job go faster and get more money, then you want to do an MCA. If you're doing the payroll, that's great to use it for payroll. But if you have something that's going to make it bring money into the company, MCAs are good for that. Now, if you need something long term, you're going to be, for a little while, it's going to take a minute to churn it, then you might not want to do the MCAs, because they're anywhere from 6 and 8 and 12 months. They want their money back. So definitely, like what you said, know what you're going to spend it on and get it spent and turned around and flipped, so you can be able to you'll be able to continue to pay the monthly, or the weekly or the daily, but you'll also have a cash flow that sustain you doing more. Because one thing about MCA, and you can talk about the relationship. So once someone do something with you, how does that relationship help them in the future by taking an MCA?
Yeah. So typically companies, want a higher amount. Typically right away, they may not qualify for that, but we usually say, or others say in the industry, you make your payments on time, you're consistent for 6 months, we can look at renewing and adding additional capital for you. So I think there's a lot of importance in maintaining a great relationship with your MCA lender, because if you're on their good side, they'll give you more money, even at a lower rate potentially.
And get it to you quicker.
Super important to do that.
And still get it to you faster. And that's why it's important how you look at the MCA relationships, because I've actually seen some of my business that have a relationship with MCAs, and they use them, like you said, when they need that money real quick. It's there. And they still have the long-term loans they may have, but once in a while, we all in business realize sometimes you're going to need money quickly, whether the boiler break down or the kitchen is going to heck. We don't know if you're in the bakery business, that can affect you. You need quick money. And we're not saying the lenders are not out here. They are. But I think our listeners to be aware that there are some lenders that move quicker and faster than others. And MCA is definitely one that moves like in a day or two of putting funds in your account. Is that correct?
Yeah, it's super fast turnaround. If you want it, you can certainly get it right away from a lot of companies. So I just think it's something that you need to prepare for. It's not like a month and a half long process with the SBA side. So I think it's very serious. It's real money. Just prepare well, talk to the right people, like Jackie's in your corner. Having a broker to kind of look around as many options as you can, I think is also incredibly important.
Okay, so basically, I think you kind of answered the next question I had was, are there any funding opportunity that you've seen has been especially successful for MCA borrowers? And you kind of mentioned some, and I know at one point you told me funding for equipment and expansion. So when do you think it's important to use MCA? I know you mentioned the payroll, but what other ways can you give us an example that an MCA borrower will have probably benefit from the funding of it, especially, maybe some
Yeah,
story or someone.
yeah, that's a great question. We recently helped fund a supplement brand, and they wanted to launch a new type of supplement, for weight loss or whatever they were doing. So this money injection enabled them to invest in more material to be able to do this type of to create some of the supplement. Um, so that was pretty interesting that they used it to now double their business, create another product so they can sell it, which is very fascinating, and that's probably going to return them a lot of money. And they've actually already asked for more funding. So it's pretty cool to see that it worked out really well, and they're able to pay it back faster as well.
Okay, great. And again, I want to emphasize what you've said as well. MCA is a quick money injection. And this is for our business owners. That's an option you have because you can go to the bank and as business, you'll get denied because there's certain criteria you hadn't met. MCA has a lot less required criteria that you need to have in order to get that money, and it's great for injection, and that's basically what that is. You need it now, you need it to happen now. You can flip it, turn it, and you can actually start paying on it at the same time. That's what this is meant for. So definitely, like you said, look at the cash flow of what your business doing and kind of see if that can match with you. If not, like I said, we definitely help them find them out. You will too, seeing how it would, would you cash flow enough where you can get an MCA. So that is important. So the next thing I want to ask you, what would be, Jack, your top funding tip for our listeners today? What would be your top funding tip for them and why?
Yeah, honestly, I think it's talking to somebody like you. I think you're a broker. You have a ton of knowledge on what else is out there. So I think letting Jackie handle your situation, let her hear your situation, and let her present many options for you to take action and hopefully get for your business. And I think NMCA, I think SBAs are great ways to start and to keep your business growing without you taking your own money out and having to be kind of you don't want to be using your own liquid cash when you may need it one day for some life event, God
Right.
forbid. So utilize your resources, prepare well, plan well, talk to the right people, and feel comfortable doing so, and have someone by your side that will educate you and explain every cost, what's going to happen, negatives, positives, etc.
Right. So I actually just had a discussion because I tell people a lot that your business can always raise more money than you ever can personally.
Yeah,
And the thing is, that's what show is about. Our podcast is about letting business owners know MCA is one of your options that's out there. And a lot of them that come to us, they don't even know about it until we explain it to them. But it's an option. So don't sit there and you need money, you need help, you went to your bank, you've been turned down, you don't know what else to do. There are options out there. That's what we're telling you. MCA is one. Like you don't have the greatest credit, but you have like a lot of money coming in, but you still need some more money. MCA will probably be the best. A great choice for you, right? So
absolutely.
that's why we're doing this one. We really wanted this podcast to be about the MCA because people don't understand how it works and how it can really, really help you. But I think it's great for someone to starting off in a business and it's really, really, it cash flows pretty good and you need money. You're starting out young, 6 months you've been in business, then you may take that lower 10,000 or 15,000 right now with an MCA, which you'll get it within like 24 to 48 hours. And then after you paid it down, halfway down, then you're looking at where you can probably get more, like now 30 and 40,000 and build it up. Now you may not keep doing MCAs because you don't have to, but you'll have that relationship that when you need it, and it will happen, in business, Jack, I'm telling the truth. Something's going to pop off and you're going to need some money. And that's why MCAs are good to have that relationship within your business relationship as well. Do you agree?
Absolutely. Absolutely. I think, relationship building is most important, I think, skill if you're going to be a business owner. I think having people in your corner like Jackie and like others, the lending facility that gives you the money, create a good relationship with them, talk to their CEO. I mean, you can certainly ask these questions, build a relationship, build a good rapport, because they certainly would want to fund you again or help you again. So I think just like establishing great relationship, asking the right questions. What is this fee? What is that fee? Why do I pay it back in this time? I think just having clarity and feeling comfortable is the biggest key in this process, and everyone is willing to help you.
Right, that's going to do it. So let's do this. Let's leave this with our listeners. What would they need to do to apply for MCA? What type of documents do you need?
Yeah, so for an MCA, we typically, just to even apply, it's upfront. Typically, it's 3 months bank statements and an application. Typically, the application is from a broker like Jackie, and then she would submit it to different lending facilities. So she's a broker. She's able to find all different quotes and approvals from different places to best fit your needs. She will go over those with you. I don't want to speak for her, but typically
you're okay. You're doing well. Doing good.
And then occasionally, depending on the lender, we will ask for maybe tax return, 1 year tax return, financials, if you're looking for a significant cash injection, and whatnot. So that's typically where it looks like, driver's license, voided check, other things like that eventually. But basic documents that everyone could probably be able to provide within a day if they needed to.
Right. And I will say that too, at this point, you're looking at MCA as a 1-page application, 3 months bank statement, maybe tax return based on the size of the loan or what you're looking for. But compare that to the regular term loans. I mean, we have compared to the 3 that we send you guys for MCA that people need, my other loans is anywhere from 13 to 22 documents. So it is more of a low document type loan, which there's going to be a higher payback. And like I said, the cost of money is what I tell everybody it is. But it's like I said, you have to think it out and what you need to use it for, because this will benefit you, because it has benefited a lot of companies in the past. So before you go, we would like to know if you have a story of someone that had actually, another story that used the MCA and used it properly and paid it back. Because I know you've been dealing with a lot of people. So do you have any stories like that so they can get a flow of how that works and how it should be done?
Yeah, there are many people I've been lucky to deal with so far. Like I said, the supplement company was great. I dealt with someone the other day for payroll. They needed it really badly. We got it to them right away. I would say there was a construction company they needed more equipment, and it was a pinch. They were getting denied at a lot of places. They were able to provide us with the right financials and other things, and we ended up building a good relationship throughout the process. And through all their persistence and waiting and providing more documentation, we were able to provide them the capital they needed to then build a new building or have the materials to pay their people. I thought it was a very gratifying experience, to hear their laughter and their excitement, knowing that, hey, we're getting this money and it's not coming out of their pockets.
Right. So this is something, like I said, it is a great industry product that a lot of people are using it and being successful and making a lot of money with it. Again, you have to know how to use MCA. If you would deal with a broker kind of guides you through it, because we got our clients through it. But and then definitely with you guys as direct lenders, you got the clients to it too. And so we know if you get this, please, like you said earlier, get a clear understanding what your cost is, what they want you to pay, read those contracts and look at them. And then you can see definitely what you need to do so you can stay on point. So I think that is something that's definitely a good advice to give with the MCA, and learn. And this is what I say, learn it for yourself. Don't just listen to everybody else. Find out more about MCAs and learn about it and see how it can work for your company. Because one thing I've seen, there's no company that's the same. Everybody's situation is different. It's amazing how different, but they are. So you need to know what's out there and what you need to do that will work for you. So that would be great. So let me ask you this. Is it anything that your final words, the words that you would tell our audience, any final word of wisdom that you would like to give them when it comes to getting funding?
Yeah, I think I would just say like reach for the stars. If you know there's opportunities like this out there and you're looking to build your business, work for yourself, not work for somebody else, I think take the shot, go for it, get the right, person in your corner, and I think shoot for the stars and invest and try. At least you can live knowing that you gave it your all instead of sitting back on the sidelines working for someone else your whole life. I think go for it. If you believe in it, I think get funding and pair yourself with and equip yourself with someone like Jackie to guide you through the entire process to see if it can all work out. So I think give it your all, have fun, enjoy, and make sure you feel comfortable.
Exactly. And I think I totally agree. And that is so true. So we want to thank our guest today for Mr. Jack coming in to speak and give us some of his wisdom. Thank you. And we definitely like to have you back as well as sometime throughout the year for you to come back. Thanks again for coming. And then I'm going to speak to our audience in a little bit. Thank you so much for coming.
Of course. Thank you so much, Jackie and TDJ Equity. I appreciate it. And I'll see you guys soon.
Okay. So we want to, like I said, we did enjoy Jack coming in today. So what I do want to say with the MCAs is that they are meant for revenue. So if you have a revenue minimum of $10,000 a month and you don't have the credit that you think you need, but your company's generating revenue, think about the MCA. Look into them. You're welcome to call us and reach out to us, or you can actually just Google and learn about it as much as you can as well, too. Okay? We want to thank you all for attending today. We appreciate you all coming in, and we wish you the best, and you all take care.
We hope you enjoyed this episode of TDJ Equity Funding Insiders Podcast. If you'd like to be a guest or get in touch with us, please visit our website at tdjequityllc.net/podcast or email us at podcast@tdjequityfundinginsiders.net. Until next time, take care.